Hi guys, welcome back again for my channel. We're going to be discussing financial accounting, preparing financial statements, assessment for practice assessment 2 with the AAT website, and we'll be discussing this practice exam with this video. Before we get into the video, thank you for subscribing to my channel, and it reached the unimaginable number of subscribers, more than 200 now. When I began this channel about few months ago, probably start of the year. I can't even remember what it is. Probably started last year. I didn't think it's going to be reaching this many students. We have more than 12,000 views of the videos, and then of course this is going to be something I'm really can say it's one of my proud achievements. And thank you for continuing to give me the support, and obviously tune into my channels to trying to conquer this particular subject, and then obviously getting really successful results as well in your pursuits of higher qualifications and personal enrichment anyway. And in this video I would like to go through the practice assessment 2. I'll be doing this again as usual in 2 parts, so make sure check the end of the video. You'll have the link for part 2 as well, and that part 2 video will be discussing the last 3 questions. On this video we'll be doing the first 3 questions of that one, because the exam is for 2.5 hours and you already know this is a really intense exam. So out of this 6 tasks, we'll be doing the first 3 to start with. Okay, so let's go into the planned the screen of this exam, because I have discussed about this in the practice assessment 1 feedback as well. As you're aware, you have indexes, highlighter, and then also you may have reference on this side anyway. This allows you to bring 2 screens at the same time to looking into a lengthier question. I will go through that bit whilst we're doing it. Okay, so let's continue with the exam, and it gives you all the relevant information you need. Once you started it, this timer will start running down. So the first task is about using daybooks, accounting for and monitoring non-current assets. Okay, so this is part of it. Part A and B is going to be related to that one. So let's look at the first one. Identify whether the following statements are true or false. Please remember, I got feedbacks from students saying the exams itself are always going to be a lot wordier than comparatively to the previous years, because this year they have combined the FAPR module from the previous qualification AQ 2016 with the advanced bookkeeping module. Therefore, this is going to be inundated with so much theory there. So therefore, the only way they can test theory in this exam by giving you some wordy questions. And I have said that is about a third of the exam will be some wordy questions, because you're going to have true or false. You're going to select yes or no for certain answers, multiple choices. They're all going to be part of this assessment. So let's look at the first one. The advantage of using books of prime entry in a manual system is that all errors will be eliminated. So straight away, I can say this is a false statement. There's no way we can guarantee the all errors will be eliminated in a manual system, because there will be errors there. You will be still have to look for it. There is no guarantee all the errors will be eliminated. So I can't say that with 100% truth that statement is right. So I'm going to choose false. The advantage of using book of prime entry in a manual system is that transactions are summarized prior to being entered into the general ledger. That makes absolute sense, because remember, book of prime entries such as day books, sales day book, purchase day books, returns day books, discount day books, allowed, received, whichever it is there, we will enter every one of the invoices and credit notes in there individually, and then we will summarize them, get their totals, VAT and net column, and then we will move them into the general ledger. So this is absolutely right, and then it's going to be a true statement. The last one is one purpose of non-current asset register is to assist in physical verification of assets. Is they didn't say the only purpose of non-current asset register. They say it's one purpose. That means the scope is bigger. So this one of the purposes is it is true because when you have your NCA next to you, you'll be able to go identify every single one of your non-current assets in their physical form, check it off their list, and then you'll be able to say, oh, I have this one. I don't have it in here. I have it in this book, but I have can't find that asset. So we'll be able to identify what it's required there. So that's really good statement there, and we'll say it's truth. So then look at the next one. It is important for the part of the business wishing to purchase high value non-current assets to obtain authorizations. Identify which of the following is not a reason for this one. So if you look at that here, there are three reasons. One of the reasons we don't have to obtain, why we don't obtain authorization for that one. So the first one is the managers can ensure the funding is in place for the expenditure. Absolutely right. The managers can ensure that spending fits in with long-term plans for the business. Absolutely right. Because we're going to look at it, business cannot spend forever unless they can get some decent returns out of that. So that means it's going to be in part of the long-term plan of the business. But then look at the last one, to comply with accounting regulations. It's nothing to do with accounting regulations. It's about obtaining authorization. So this one is not the right reason. So we will say no. And the third one, part 3 of that one, complete the following statements regarding depreciation of non-current assets. The depreciable amount of an asset is cost of what? It's going to be cost less asset, the asset less the accumulated depreciation, or asset less the residual value. The right answer is asset less the residual value. This is the amount I can depreciate, because if I buy an asset for £10,000, and if I have a residual or scrap value of £2,000, the depreciable amount will be the difference between two. The difference is going to be £8,000. That is the amount I will be depreciating. But also remember, this is more likely going to be a straight line method, because on the diminishing balance basis, we will not call that as a depreciable amount. So it's always going to be related to straight line. So this is going to be the one. What is this one? Asset less the accumulated depreciation. That is your carrying value. What is the value of your asset? It's your value or the non-current asset at cost. Okay, so the answer is going to be asset less the residual value there. So now if you look at that here, Nancy is a sole trader. She keeps a non-current asset register, which is separate from the ledgers. That can be ignored. So thank God for that one. We don't have to worry about that. You are working on her accounts for the year ended on 31st of March 2018. Nancy has the following policies in place. Relevant expenditure over £150 is going to be capitalized. Full year of depreciation is to be charged in the year of acquisition. No depreciation to be charged in the year of disposal. Even though you use it for 11 months of the year, we won't charge no disposal. If you charge, or if you use that for 1 month of the year of acquisition, we still charge the full year of depreciation. Machinery depreciated at 20% straight line method, and then assumed to be having 5% residual value. Okay, so we have to start taking this 5% away. Then we can work out from the depreciable amount, there will be a 20% straight line. This one on the vehicle, though, we were depreciating on the diminishing balance basis. In that case, it will be only used with your carrying amount. Carrying amount is going to be depreciated 25% every year. There is no expected residual value there. So that's absolutely fine. And they're talking about there is a van was sold in the middle of the year. We have to look into that one. So this is where I'm going to show you this reference bit. So if you click on the reference, you can click on this part here. You will be able to bring the question like this right next to your NCA. Instead of, if you're not having it, you have to go back and forward, up and down on your screen. So if you click on the reference, you'll be able to see a little bit more of a screen there, and then you'll be able to fill that information while you're next to it. So which is a really good option for you, especially when you're doing that exam in a computer. Your screen is going to be a lot bigger. Unlike this one, this is a laptop, so the resolution is lower, but you still can see enough of this. Okay, so let's see this now. Let's look at the question quickly. So here, the question is asking you, enter the acquisition and the disposal into the NCA shown below. Enter the depreciation entries into the NCA registered below. All the figures should be to 2 decimal places. So make sure you do every entry into 2 decimal places because it is important. Even if it's a full amount like this way, we see here 9,700 pounds. They're using 2 decimals there. You must follow that. Enter any dates in the format of DD, months, dates, months, and year in 6-digit format. Show the year as X6, X7, or X8. Do not put 18 or 08, 28, whichever it is there. Use this particular format. If your answer is 0, enter 0.00. Please follow this instruction. So let's see that now. What we're going to do about this non-current asset. She received 5,000 as a bank transfer. The van was purchased on 11th of March 2016 for 27,000 pounds. So here, this was initially bought at 27,000 pounds. So we look at that now here, that is the van right behind here. So if you look at that, the question now, the van was itself received. This was bought on 27th March 2016. So if you see here, that's been depreciated accordingly. So now at the year of disposal, there is no depreciation charge now. So there is no depreciation charge. So what we do here, the vehicle will have 0 depreciation charged, and the carrying amount also will be 0.00 because there is no carrying amount for something disposed of. The proceeds of the disposal is going to be 5,000 pounds. So I'm going to write that 5,000 pounds here. 5,000 pounds here, and the date of disposal, it's going to be told as 28-02- capital X, and the year was 2018. So it's going to be here as 28-02- X8. Okay, you must follow this and you have to do that very clearly. And you also notice all the boxes you need to fill out, it is clearly highlighted. These are the boxes you need to do. And then also they're saying here, you need to fill out the new acquisition as well. The new acquisition itself, it is a invoice extract for a TULE machine. Excuse me. So this is a printer. So this printer also, we have to look at it. Possibly it's a printer. Let me just check what it is. Yeah, it is a machinery. So in this machinery now, we have to put it down as what is the cost of it. Remember, the cost is going to be only the net amount, not the VAT. So we don't have to worry about that now. So we have to look at it here. What is the cost I can capitalize? There is a rule. Any cost in relation to the machine arriving at the place it's going to be operated at, or any specialized work needs to be done on it, and then any particular setup cost for to getting the machine working first time can be capitalized. But a maintenance contract, on the other hand, it has to go as an expense. So that doesn't have to be capitalized. So out of these two, even though they have what do you call uh, the expenses are what do you call they say the relevant expenditure over 150 pounds is to be capitalized. So we just have to think about it whether we can add that cost to that one, because it is very important we decide how much I can put it down in there as the cost. So here what else they have there? Okay, let's see how much it cost. James, who works for Nancy, is paid 25 pounds per hour. It took him 15 hours to install and set up the machine. So let's see how much we paying James to set up the computer. So it's minus that one is going to be 375 pounds. So that 375 pounds has to be added to the cost of the machine plus the delivery charge. So that is going to be 12,100 added together gives me a total value of 12,475 pounds as a capitalized figure. Because here, this initial setup, it is very important, because if this machine is not being set up by James, we cannot be using that. So therefore, we have to think about it as this is all has to be capitalized. And then also remember, they have a policy of 5% residual value of these assets when we're going to what is that again? Depreciating them. So whatever we're going to do, we're going to do a straight line 20% of the depreciable value. So let's see how I'm going to depreciate these non-current assets. So here, let's see that example of it now. For example, here, 9,700 pounds. What is the 5% of it? 5% of that is going to be 485 pounds. So if you take that away, we have 9,215 pounds multiplied by 20%, I am getting 1,843 pound as a yearly depreciation. Since it's a straight line depreciation, the straight line depreciation value for each year, it doesn't change. So I'm going to fill that in here straight away and then find out how much I have left over after that. So if I look at it, 6,014 pounds minus 1,843, that is equal to 4,171 pounds 00. Okay, so we have that carrying amount done there. Please remember there is a thousand separator here. You don't have to do that. You only have to do the decimals in an acceptable manner. So now let's look at the TULE machine. Let's find out what is the residual value of that. The residual value of that is going to be 5%, which is coming to 623 pounds and 75 pence. So for me, the depreciable value will be 1,108. So no, 1,100, 11,851 pounds and 25 pence. So that 11,851 pounds 25 pence is going to be depreciated at 20% straight line method. So let's find out what is the 20% of it. I am getting 2370.25. So this is the amount I have depreciated for the year. And then whatever I'm going to have, 12,475 minus 2370.25. It gives me an answer of 101.04.75 pence. So this will be the right answer for this one. Okay, 101.04.75. And then also there is a small box here. I don't know why, but that's nothing to be filled because when I'm putting the cursor over it, it is actually saying nothing there, so not to worry about it here. Then here, I have further depreciation to do, this TR08HNE, and this is a vehicle. The vehicle is going to be depreciated 25% in the diminishing balance method. So here, this is the carrying amount of 14,700 multiplied by 25%. It gives me 3675.00. And whatever I got left after that, it's going to be 3675 multiplied by 3. I will get 11,025 pounds dot 00 as my carrying value. So all of those boxes in here are populated the way it is expected. So I can close the reference now. I don't need that anymore. I just start to work my way to check whether all the information are there. So once you've filled all of that information, you get 5 marks for this setting up this information here and this one here, and the rest of them 6 marks to calculate the depreciation 1, 2, and 3 depreciation. That is 6 marks to do those entries. So guys, keep an eye out for that. Decimals are most important here. If you fail to do the decimals or fail to put the zeros here, you will get no marks for that. Even though you put the whole amount without the decimals, the answers will be incorrect. Now they're talking about now complete the disposal account for the disposal of the vehicle, showing the amount to be transferred to the statement of profit and loss. So if you look at that here, the machine or the vehicle or whatever it is, let me see which one it is. Yeah, the van cost them 27,000 pounds. This will be in that non-current asset register as the cost, the 27,000 pounds here. In that relevant T account for the vehicle, you will show 27,000 pounds on the debit side. To remove it, you credit that relevant T account, and then on the disposal account, we're going to say vehicle at cost 27,000 pounds. Okay, and they also want you to do it in 2 decimals. And then the next one is the accumulated depreciation. The accumulated depreciation of that non-current asset, it is this and this is the 2 years worth of accumulated depreciation. 6750 plus 5062.50, that is equal to 11,812 pounds dot 50 pence. So this one is my accumulated depreciation for the vehicle. So if you look at that here, this would have gone into that account on the credit side. To remove it, you have to debit the accumulated depreciation, credit the disposal account. And then also they have said they have received £5,000 via the bank transfer when we sold it. This is not a part exchange. Therefore, we received £5,000 into the bank. It is a debit entry into the bank. It was money coming in. Here it will say bank credit £5,000. So it is 200 goes here. But now the problem I need to know whether I have made a gain or a loss on disposal. If you notice that now, if you look at this vehicle at the time of disposal, there is a carrying value of £15,187 and 50 pence. But instead of that carrying value, we only realized amount of £10,000, or sorry, £5,000 there. So therefore, we have achieved a loss on disposal of £10,187 dot 50 pence. This will go into the statement of profit and loss on the debit side as a loss on disposal. This loss on disposal itself, obviously, you can understand a carrying value of £15,187 50 pence in my accounts, but when I sold it, I only got 5,000 for that one. So it's therefore there's a big shortfall of that amount we should have received, but this is going to be going as a loss on disposal for the business. So now they're looking at the the fourth part here. Complete the journal for the depreciation charge for all the machinery for the year ended on 31st of March 2018. Show your answers to 2 decimal places. So here, if you look at the machineries, if you look at the depreciation charges, these are the 2 depreciation charges. How I'm going to record it? These 2 will go as an expense for the business for that year. So 1,843 plus 2,370.25, that gives me 4,213 pounds dot 25 pence. We're going to choose one of them, debit, 4,213 pounds dot 25 pence. And this is going to be a credit. But which accounts? As I mentioned to you earlier, expense of the depreciation will go as a depreciation expense account. You remember your debt click, expenses accounts are debit accounts. So this is going to the debit. What is the credit account? Credit account is going to be machinery's accumulated depreciation for the year, and that accumulated depreciation will go against the non-current assets in my statement of financial position. So this is a credit entry and I have completed that now. So let's check it again whether I have missed anything there. Everything's been completed and I should be getting a good marks for this question. So I press answer. When I press answer, it moves automatically to task number 2. So if you have any doubt about the previous one, you can click on the previous button here, and then you can go in there, edit, and then you'll be able to go with this question. I have nothing to edit now, so we'll go back by pressing the answer. We're back to task number 2. So the task number 2 is about recording period and adjustments. This task contains part A to C. You work at an accounting practice, working on several different client accounts. Your manager approaches you and tells you she needs prepaid expenses finalized before the end of the today for the specific clients. If that is not possible, then you should just leave them out completely. Straight away, we have a problem now because there is a problem with that request. It says here, identify which one of the following potential consequences of complying with the manager's request. They're saying here, the accounts will give a true and fair view of state of the organization. I don't think it is. It says here profit will be understated, liabilities will be overstated, leading to incorrect decisions being made. Now we have to decide if there is going to be a prepaid expense, what we're going to create. if you have a prepaid expense, we are taking some of the amount we already paid for the expense out of that expense account, and we will create a prepaid expense asset account. So in case we haven't done that, obviously your profit is going to be understated, but no changes will be happening to your liabilities. But if you look at the third one, the profit will be understated and the assets will be understated, leading to incorrect decisions may be made. It makes more sense to me because remember your accounting equation, asset is equal to liabilities plus capital. So if your profit is understated, it's going to affect your capital, isn't it? Your capital is going to lower. No changes to your liability, but asset is also going to be showing lower. Why? Your prepaid expenses will be classed as an asset in my statement of financial positions. So if you haven't done that, your assets also going to be understated. Okay, so profit will be understated, assets will be understated. That will be the correct answer for this one. I don't think the profit will be overstated. The reason why, if you have a prepaid expense, if you don't take it out, the profit is to have no changes whatsoever. All right. And then this is straight away wrong anyway. So the answer is going to be the third one. Now look at the next one. The financial year ends on 30th of June 2018. Any adjustments for prepaid expenses that are made should be dated when? So if you make any prepaid expenses, what is the adjustment you're going to do? You're going to do the last day of the month. So you're going to click on it here, and then you're going to go to the month. It's going to be stated as June. 30th of June is the day you do the prepaid expenses, any adjustment you do. A reversal of these adjustments will be done on the next day, means the first day of the new financial year starts. So in this scenario, if your financial year ends on 30th of June, the new year starts on July the 1st. That is the date you're going to show that the entries will be made. Even though here, if you look at that, that date is falling on a Saturday, it does not matter. This is for the accounting purposes we do it. I know we'll make the entry somewhere late in the year. It doesn't matter. For you, the date should be the first day of the new financial period. Okay, so that is equal to 1 mark there. You receive an email from another client, include the following. The invoice we sent to JS Limited, one of our customers, should be paid at the start of the next financial year. But I have a feeling that they might not be able to pay. So what we need to do in this scenario, they didn't say they might not will not be able to pay. They say it's might not be able to pay. So what we need to do in this scenario, we have to set up a specific allowance for doubtful debt for that particular customer. We can't write it off yet. Why? Because there's a possibility they may pay, but if they cannot pay it, we will write it off. But at the moment, they might not be able to pay. Therefore, I know exactly who they might, who's the liability may be, or means the potential loss may coming from, and I will set up a specific allowance for doubtful debt there. I wouldn't do anything about the amount for general allowance of the doubtful debt. I would not change general allowance for doubtful debt. It's normally taken as a percentage of your overall balance of your receivable ledgers control account, your RLCA or SLCA, trade receivables, will be a percentage of that one, 2%, 3%, depends on what is the scenario for the business, how it looks like. But if you exactly know you one customer, you choose a specific allowance for that one. You are now working on the accounts of Angela Deering, a sole trader, for the year ended 30th of June 2018. You're considering the administration expenses of the account. The cash book figure is 35,750. So that means this is the amount they paid for that year. Okay, so this expense was paid out from the bank, 35,750. They're also saying this includes £800 electricity, which was related to May and June of 2017. So therefore, this amount was for the previous year. Previous year means this year started on 1st of July 2017 to 30th of June 2018. So therefore, the part of the payment was an accrued expense which was settled later in the year. So what you normally have for that end of last year, 30th of June 2017, you would have created an accrual account on the credit side of the accrual means accrued expense account, there will be a credit balance because it's a liability. So that £800 will be reversed into this what do you call here, back into that expenses account. So how are we going to do? We'll debit the accrued expenses account and credit the administrative expenses account. So this accrued expense reversal will go here as £800. And then also please remember, it is talking about your answers have to be in 2 decimal places. So even though it says 800 here, I will follow my instructions very clearly. Choose the decimal places wisely as well. If I don't use it, I will lose marks. Okay, so now let's look at the next one here. But the corresponding entry yet to be made this year, we have done that now. And then they're also saying here, an invoice for the insurance had been included for £4,500 regarding the 12 months from 1st of February 2018 to another 12 months, isn't it? So it's going to be until 31st of January 2019. So the year is ending on 30th of June. Therefore, if I consider the payment for this insurance only February, March, April, May, June, 5 months can go into this year expense. Rest of them are prepayment, which is being paid in advance on 1st of February. So we have paid it already. So let's find out how much it can go into this year and how much we have to take out of that one as a prepayment for the expenses of insurance. So £4,500 divide by 12, it shows me 375 per month, and multiply by 7 months, which is £2,625. £2,625. We will take it out as a prepaid expense. Remember, if I enter that here as a credit entry, we create a debit account of prepaid expense. And remember, that is an asset. A prepaid expense, it's something we paid more than what we owe. Therefore, we create an asset account which will go into my statement of financial position. Next year, that will get reversed. It doesn't matter. But for me, for this year, we have to take it out of this expenses box, 35750.00, which is the total bank payment. So we're going to say it is from the cash book because we don't have a bank entry here. So we choose the possibly the right answer of cash book. Now, if you see the difference between those two will be the amount will go into the yearly profit and loss statement. On the profit and loss statement, the difference between these two amounts, £35,750 minus 3,425 will be classed as 32,325 pounds. And this is the amount I'm going to be recording as my yearly administrative expenses amount there. Okay, 32,325 pounds. Okay, so if you seen that here, the reversal goes here and the prepaid expenses also been taken away. This amount is what we paid more in this year, which should be for something accounted for next year. Next one is your final task of the day is to work on the final accounts for Ajay, a sole trader who runs a sweet shop. I almost said a sweatshop. A sweet shop. Alongside the sweets, he sells hand-decorated sweet jars. He is considering his inventory for sweets. Okay. Now, it is his policy to sell any sweets which he does not consider to be perfect at 50% of their normal selling price. One of his range is AR sweets. Each packet of sweets retail for £2.50. They cost £1.75 per packet to manufacture. He currently has 87 packets of these sweets. A box containing 15 packets of sweets was dropped and all packets were damaged. Now they want you to do what is the total inventory value which should be included in the accounts in regards to AR suites? Show your answers to the nearest penny. For this one, I'm going to, guys, to bring a spreadsheet quickly. So let me just bring the spreadsheet out as a new window so I can share that screen with you in a second. So how I'm going to share it, give me a second, please. Share the screen. Okay, let me share that as a screen now. Excuse me. So here, what we have in ourselves is a conundrum. So here, there are 87 packets of these sweets there. What is the rule when you're going to account for inventory? We're going to find the either the cost or the net realizable value as my the value of my inventory here. So here we have to look at the cost, which is 175. The net realizable value, because it's going to be 50% of that one, it's going to be £1.25. So therefore, any damaged sweets will be sold at £1.25, which is lower than their cost. So when we're going to value the inventory, we're going to choose the NRV of that 125 for those damaged packets. So therefore, 15 packets. So out of 87, 15 packets will be sold at £1.25. So here is going to be equal to this multiplied by that. That gives me £18.75 for that, for 15 packets. How many packets I have left? I have 87 minus 15, and that is 72 packets. They will be sold at £2.50. Therefore, the cost will be used as their valuing the inventory. So I'm going to just drag and drop here. It will tell you that's £126. So the total cost is going to be this plus that, or the cost or the value of the inventory is going to be classed in our books as £144.75. So let me just put that here, 144.75. So this is the total inventory value of the suites called the AR suites. Now let's look at the next one. This one is a bit tricky because people have found it a bit harder because the word they use there kind of a misdirecting. But then again, you have to consider the fact what they're actually implying here. Whenever you get it, you have to do is write all the information down there and just find the missing information out of what is that again, all the jumble you have put it together. So now let's look at the first one. The jars are retailed at £20 each. They cost £10 each. 3 jars are damaged and they will cost you total of £40 to repair. They didn't say each £40. They say it's going to cost £40 to repair these 3 jars. So that is the amount I'm going to worry about. They will then be sold for, offered for sale at 10% discount. Okay. So now what is my realized value of this retail jars? I'm going to be still selling them £20 less the 10% discount. Okay, so what is the price? I'm going to look at it. So here, the jars, 3 jars I'm going to look at. So here I'm going to say jars. I have that. Okay, jars. How many of them? 3 jars. Okay, so I'll say jars x3 selling price. Okay, so here the amount I'm going to be using selling it is going to be equal to 20 multiplied by 3. Yeah. And then you're going to multiply this by 90% because you are going to sell it for, what is that again? 10% discount, isn't it? So this is the selling price of those 3 jars. Okay. This is the amount I'm going to realize. But to sell those jars at that price, you have to spend repair cost, I didn't say cost is £40. So my net realizable value here of these jars are at the moment difference between those two of £14. My cost itself, the original cost is £30 because each jars cost me 30, isn't it? £10. So 10 multiplied by 3 is 30, but the net realizable value in this scenario is going to be £14. Which is the lowest, original cost or the net realizable value? Net realizable value, £14. This is the amount I have to do here. They want you the answer at the nearest penny. So I'm going to say £14.00. This is the inventory value we have to account for these three jars. Okay, so let me go to Teams quickly. Then I will share the exam screen clearly for you again. I may use the spreadsheet again. That time I will bring it back up. So this is the amount I'm going to record in the books for these two different inventories. Okay, so we've completed all of it here. Let me show you what is the purpose of flag. Here, if you flag a question, like if you haven't answered it, then if you go and look at the index, you'll be seeing that flag icon show up there. It says here, this is flag. When you're going to submit it, it will come up, oh, you have a flag question there, you have to go back and answer it. Okay, and then this is not answered yet because I haven't pressed the answer yet. So if I press answered, it automatically says it's answered and it moves on to task number 3. This is the last question we're going to do for this video. We will come back and do the others in few minutes after we're done this particular question. We'll answer it and we'll move on. So let's look at this one. This task about producing, adjusting, checking, and extending the trial balance. 20 marks for 24 marks for this question, guys. So it is a very intense question. Identify whether the statements are true or false about the extended trial balance. Okay, so here an extended trial balance for a partnership will have extra columns for the appropriation account. What is the meaning of appropriation account in the extended trial balance? We don't do that there. We will do as a separate appropriation account. So therefore, this is the false statement. Interest on drawings may appear on a partnership extended trial balance, but will not appear on the sole trader trial balance. Yeah, it's true, because sole trader doesn't charge himself an interest for either way, or interest or a capital. Partnership, on the other hand, may use that one because that way partners can streamline the money for the best usage of the business. So therefore, this is true. A partner's salary will appear as a debit in the statement of profit and loss statement on the extended trial balance and credit in the statement of financial position column of the extended trial balance. That is absolutely right. Why? Because this one will go into the appropriation account. Once we've done the appropriation account, we will do the same amount into my current account later on when we're going to complete all the year-end reconciliation. So this is absolutely right. Capital account may appear on the sole trader extended trial balance, but will not appear on the partnership trial balance. That is wrong, because on the partnership extended trial balance, you will have capital and current account. So you cannot say we only have current account or the capital account, because it will be both there. For the sole trader, you only need the capital account because current account serves no purpose there. So that is a false statement. So now let's look at the next one. There is this question about asset, liabilities, and capital. So again, guys, we're going back to basics of the accounting equation. What's the accounting equation? Assets equal to liabilities plus capital, or you say asset minus liabilities equal to capital. They're both same. So here, the first statement says JS supplies obtain a loan from the bank. What is that going to do to my asset? What is that going to do to my liabilities? And what is that going to do to my capital? So the question I'm going to ask first, what happens when we take a loan? Where are the entries going to be? The first entry I'm going to think about here, when we take a loan, we create a liability of a loan. Bank loan will be a credit account. It increases the liability. But on the other hand, when we took the loan, the amount we receive for the loan, it goes into my bank account. That bank account is an asset. That is also going to increase. So you increase your liabilities, you increase your assets, no changes to your capital because capital will not be affected. Assets and liabilities both will increase. Then remember, your asset minus liabilities equal to capital. Since if both of them increase by the same amount, the capital will not show no change whatsoever. So now let's look at the next one. JS Supplies makes purchases on credit. So when I'm buying goods on credit, what I'm doing there? Am I spending any of my money yet? No. What I'm going to do when I purchase goods on credit, I am actually obtaining some stock. That stock, what is that going to do at the year end? The year end, that is going to increase my value of asset. But we're not going to worry about the year end. At the moment, when we buy goods on credit, what are the record we're going to do in our books? We're going to do debit purchases, credit my PLCA, purchase or payables ledger control account. So when we're going to increase the purchases, that purchases will reduce the profit for the year because it's an expense, isn't it? If I buy goods on credit, therefore, I'm going to incur an expense. That expense will go into my profit and loss statement. If that goes into my profit and loss statement, I'm going to incur a less profit. If you have less profit, what is that going to do to your capital? It's going to reduce your capital, isn't it? So your capital is going to come down. Your liability is going to increase and your capital is going to come down. It's not going to change your assets as of yet because your assets will not show until you do the year-end adjustment. For at that point, when we go doing these transactions, there is no change in your assets, but your liabilities will increase because your PLCA will have a credit entry that is going to increase it. Your capital will show a decrease because if you do a profit and loss statement at that time, expenses has gone up, your capital will come down. Look at your accounting equation. Your asset has not changed. If your liability increases, definitely your capital has to change. It has to come down. All right. That is more or less of the way to explaining that whole shebang, put it that way. I'm sorry about that, guys. I'm just trying to recover from a bad winter bug I, went through during the Christmas time. So it was a nightmare getting back to feet. But again, I'm up and running now, and hopefully carry on doing these videos, and hopefully, do several more in coming weeks. I had so much plans, but they all were derailed once I went down with the flu. But thank God I'm back to normal. So thank you again for keeping patience with me. So let's look at the next question now quickly. We have a few more to go anyway. So here you are reconciling the balance of the payables ledger control account to sums of the balances on the individual accounts within the payables ledger. Payables ledger control account has 27,446, and your sum of the balance of the individual payable accounts is going to be 27,214. So PLCA is higher, the purchase ledger individual accounts showing a lower balance. Following the investigation, number of errors has been discovered. Now we have to say whether we have to make these amendments there, and then they also want to know whether am I going to put the amount here, and then also you have to say which may have caused the difference between the two balances. Each error should have at least one entry next to it. If there is no overall effect, select no effect on the final column. So you have to say no effect there. So here we have to say, the debit or a credit amount for any of the errors. I'm going to correct it. So now let's look at the first one. An invoice from John Green for £140.70, including VAT, has been posted to Jan Grun account in the payables ledger. This is a classic example of an error of commission. Therefore, this will not affect either one of these because one of these accounts will have a debit entry. One of them will have a credit entry. I can simply put it here, but this will not make an overall effect on that one. So I'm going to say it's going to be a no effect. Look at the next one here. A credit note for discount received of £12, including VAT, which goes into the books as including VAT anyway, because we have to pay the suppliers the VAT as well. Or when you're getting a credit note, that also will come back with the VAT for us. So they've been entered into individual payables account, but has been left out of the payables ledger control account completely. So here, there is no changes whatsoever here, but we have to find a way to enter it in either debit or a credit balance. But what you know, a credit note will reduce the balance of the payable ledger control account. Payable ledger control account is a liability account, so normally has a credit balance. Therefore, this £12 will go here as a debit balance there. And it doesn't say anything about decimals, but I will still stick to my knowledge by putting £12 on decimals there, just in case. But you know what? I'll do one of them as £12, uh, and the others I'm going to do with decimal to see whether that's going to make a difference, because it doesn't say anywhere here I have to do two decimals. Okay, so let's leave it. An invoice of £60 included VAT was posted to the wrong side of J. Smith's account in the payables ledger. So the payables ledger in the J. Smith's account, which is going to be the individual payables account, it's been entered into the wrong side. Normally, if there is an invoice, that is going to be entered on the credit side of my payables ledger account, isn't it? Payables ledger account will have £60 should have been the credit side. But here they done it on the debit side because it's the wrong side. To correct it, I have to put the right amount on the right side twice. The first amount is £60 to remove it, and £60 again we have to put the right amount back in. So I'm going to say £120 here. I'm just going to do with two decimals just to see whether I'm going to be penalized for doing the decimals, since it didn't ask about that decimal here. So let's check it out. The last one is the total columns of the page purchase day book has been overcast by £100. So the purchase day book is normally a book of prime entry. We take the totals, we'll enter them into the general ledger, which is the part we're going to be entering into payables ledger control account. The total amount goes into the purchase ledger control account or payables ledger control account on the credit side as a liability, because we're going to increase that liability. In case if you overcast it, that means we did put £100 too much onto that account on the credit side. So to remove it, what we need to do, we have to do that on the debit side, so we can remove that amount now. So now let's see whether my reconciliations are matching. Okay, so if you look at that here, the payables ledger control account has a balance of 27,446 for 27,446 minus the £112 gives me £27,334 now. So this is the updated balance of the purchases ledger control account. What I'm going to do, I'm going to just quickly write it here. I will not keep it here. I will delete it off before I go away. So this is the new balance of the purchases ledger control account. Look at the individual balances account. It had a balance of £27,214. Once we enter this credit amount of £120, it also will have £27,334. It's a way to confirm you have made the amendments appropriately. So if these two balances are matching, all my errors are clearly been corrected. So now I'm going to remove that balances here, and we're going to leave it, and we're going to check whether I'm going to lose marks for that later on. If I have everything else right, but this one will lose me 1 mark, I will make sure I tell you, do not do the decimals if it didn't mention anything about it. Okay, so let's have a look at the next one. The ledger columns of the extended trial balance has been produced here. The debit column is 2,763,865. The credit column says £2,674,365, and a suspense account was set up. So here the suspense account was set up on the debit side because the credit side is higher than the debit side. So the following errors being found out, correct those errors. We need to do further adjustments now. So for that one, I'm going to bring my good old reference point here. See whether the reference is allowing me to do it. No, I don't think the reference is coming up now. No, it doesn't have the reference. So I have to just scroll up and down a little bit. But let's see. This is where they should I use the reference, because I don't have to go back and forward. So now let's see here. A bank payment for rent for £4,800 has been reversed in the ledgers. So if something's been reversed in the ledgers, what do you need to do? We have to do the right entry twice into the right T accounts. A bank payment will be a debit into the rent account, credit into the bank payment account. So if it's reverse, it's been entered credit into rent account and debit into the bank account. Therefore, there is no suspense account involved here. So what I can do on the bank account, I will go enter £9,600 because I have to do that twice, isn't it? Once to remove the incorrect amount and to enter the right amount, we put that £4,800 again. So this is the first entry. And the rent account here will have £9,600 as the credit side, debit side. There is no mentioning about they need decimal places. So I'm going to strictly keeping the whole numbers there. So next one, the total columns of the sales day book has been overcast by £1,000. So therefore, SLCA would have had a debit entry into that £1,000 more. So which is RLCA? Put it another way, it's your trade receivables had £1,000 more on the debit side. So to remove it, we put £1,000 here on the credit side, and then also we do a suspense account on the debit side now, because if you do credit and a debit, there is no second account there. Suspense account is the only account I can think of. So now let's see the third one. Max took £1,500 out of the bank as a drawings. This is recorded into the cash book, but not in the drawings account. What is the entry normally? The entry will be drawings account, debit, cash book, or bank account, credit. So it's been recorded into the cash book, therefore drawings account not been entered. So let me find the drawings here. I'll put 1,500 here as a debit, and the suspense account will be 1,500 credit. Now, if you notice your suspense account, 500 on the debit side here, another 1,000 on the debit side here, it is 1,500 debit and this 1,500 credit. This would have cleared my suspense account at that instant. Now look at the last one. No entry has been made in regards to the closing inventory. So if you look at that here, the closing inventory says statement of financial position and statement of profit and loss. The amount is 8428. But I need to know which one is what. Statement of financial position shows you what you have left in your inventory. Therefore, it's an asset. That asset is to be a debit entry. Therefore, it is going to be 8,428 pounds. If that is a debit entry, your statement of profit and loss definitely going to be a credit entry. But if you want to know why, this is the amount I take away from my cost of sales. This is basically forming a calculation of the cost of sales. On your cost of sales, you add your opening inventory with your purchases, but you take away your closing inventory. Therefore, in my statement of profit and loss, this has to go onto the credit side on the extended trial balance. So we've done all the adjustments it is required, and that is 8 marks for that one. And let's move on. You see that both adjustments are totaling up to £20,528. That means we have completed everything appropriately. So now let's look at the last one here. You have now been asked to complete the trial balance as at 31st of March 2019, an extract of which is shown below. You are given the following information. Accrued income for the year recorded as £1,000. Allowance for doubtful debt figure has increased by £100 as at 31st of March 2019, it stands at £1,800. They want you to know what is the amount I'm going to do on the extract of the trial balance. Okay, it's not the adjustment they want the extract of the trial balance. So here, accrued income for the year is recorded at £1,000. What is your accrued income? It's something I should be getting, but I haven't been paid yet. Therefore, your income account will have a credit entry. The accrued income account will have a debit entry because it's an asset. We are expecting that money to be paid the next year. Therefore, we create a debit entry. Allowance for doubtful debt, it was increased as of 31st of March 2019. It stands at £1,800. So it is always a liability because allowance for doubtful debt we set off against the RLCA in my statement of financial position. It is a doubtful debt liability in case your customers are not going to paying their bill, but they are more of a doubt, not a guaranteed debt. So therefore, we're just going to keep that as a liability against my RLCA there. And the next one is due to a large purchase of a non-current asset last month, now we are now owed £540 in respect of VAT. During the year, this has been a disposal of non-current asset, which resulted in gain of 250. There is two there. So now they're saying here, we are now owed 540 in respect of VAT. So therefore, the VAT is going to become an asset for me. Normally, it's a liability account. This will become an asset. This VAT will show a debit balance. So this will be going on my extended trial balance as that. The next one is during the year, there's a disposal of non-current asset, which result in a gain. So if there is a gain on disposal, that becomes an income in my statement of profit and loss. So on my extended trial balance, that'll go as a credit of £250. And then they're also saying here, you have also given prompt payment discounts of £1,820 during the year. So we are also given prompt payment discounts. That means we have taken that ourselves, isn't it? Let me see whether it's going to be taken. No, hold on. Disposals here. I have to do the right box. I have to follow that information here now. This one, we're talking about, we have given. Okay, so if it's given, that means that is what we allowed our customers, £1,820. So therefore, it is an expense to the business. I'm going to put that here on the debit side of the extract the trial balance, which will be eventually going into my statement of profit and loss as an extra expense. So also they're saying here the increase in allowance for doubtful debts. Okay, so here I have a slight doubt because the word they have used here, they didn't say the allowance for doubtful debts account. They're saying increase in allowance of the doubtful debt. So therefore, this is the adjustment, isn't it? Because in that case, this adjustment was done on the credit side of the allowance for doubtful debt account. This one is allowance of doubtful debt. This is the adjustment we have to make in my statement of profit and loss. This is the expense of £100 I used on the debit side of the allowance for doubtful debt adjustment account, and allowance for doubtful debt account itself have a credit entry. Therefore, it is increased to £1,800. Okay, so these are the entries for that one. And then that should convert it. So let's see here. Answer. Now we have completed 3 questions now. Let's see the index. Yes, it shows here we have answered 3. What I'm going to do now, I'm going to press submit and to see how I stand with my answers, because I know I haven't answered question 4, 5, and 6, which I'll be doing in the next video. So let's have a look at it now. I'm going to submit this answer and see what is my breakdown is going to be. So here it shows me a breakdown. Yes, it still gave me the full marks for that decimal on the what do you call reconciliation of the ledger control account and the individual ledger accounts. So it is okay if you still do decimals if we didn't ask you for it, but please read the question carefully. If they're asking for a ledger control account, sorry, the decimal amounts, please make sure you put the decimal account there. But according to them, I didn't meet the successful target because I got 66 out of 66 for the first 3 questions. I'm still not good enough because I'm going to work on the next exam in a few minutes later. This exam took me an hour, 5 minutes now to do 3 questions. So you will do further 3 more questions on the part 2, and we'll be discussing how to complete that one, because that is going to be most related to your FAPR. So if you look at that here, producing financial statement, accounting principles, preparing accounting records with the incomplete records, they're all related to your FAPR module. So guys, thank you very much. Please make sure click on like and subscribe to my videos, and then of course, if you can, just look into the part 2 of this video a bit later on, which I'll be recording and uploading in due course. Okay, I wish you all the best, and I'm looking forward to you seeing you again, and take care, guys. Bye-bye.